Hello everyone. This is Dr. Pooja Sharma, working as Associate Professor in Department of MBA. Today I am going to explain a very important concept of financial accounting, that is depreciation. Depreciation, when a business purchases a fixed assets, it is actually purchasing a bundle of services benefits that will be provided over the length of the asset's useful life. Depreciation means a fall in the value of the fixed assets because of the continuous usage, because of the passage of the time, or because of any accident or because of any reason. When you are using any kind of fixed assets, the value of that assets will decrease continuously, and because of this reason only the depreciation is charged in the accounts. Thus, only a portion of the total cost is charged as an expense in the current year. Depreciation is a kind of an expense which is it is treated as an expense in the books of accounts, and the depreciation is charged on the fixed assets only. And this kind of expense is it is a kind of the internal expense in the organization, and the amount of service benefits used up during the year is called the depreciation. It is based on the matching concept, matching principle. The cost of using the fixed asset in a particular year should be charged against the revenue earned in the same year to get the true profit of the organization. Depreciation means the allowances of wear and tear on the equipment or the machinery. Amount of decreasing value in the capital assets allowed to be deducted as depreciation from the business tax. And it is the cost recovery also. Why it is said the cost recovery? Because you have expensed a huge amount in purchasing of the fixed assets. When you are purchasing a fixed assets, you cannot show that expense in the books of accounts. The complete amount on the same year you cannot show in the books. So because of this reason, you will write off the amount year by year till the uses of till the life of the particular asset. So whenever the company has to charge the depreciation in the books of accounts, there are certain benefits to charge there are certain benefits which you can have from the depreciation. First, you can show the specific amount or the write-off amount in the profit and loss account. So that will decrease your tax liability. Second thing, it is an internal expense which is not paid to anyone, and you can replace the assets with the sum up amount. You can replace the assets, and you can say that you can have the year by year you can take out some amount, and you can collect the amount, and you can use that amount for the replacement of the asset also. Third thing, when you are charging the depreciation, it is an internal expense. As I said you, it is an internal expense. It is not paid to anyone. And depreciation is the benefit which is given to the companies or the owner of the asset only. It is given to the depreciation can be charged by the owner only. If you are purchasing the asset on the rent basis, you cannot have the right to charge the depreciation. What can be depreciated? You can depreciate only the property only if it meets the following requirements. First, asset is used in the business or held for the production of the income, or you can use that you can use that asset for the production or the manufacturing purpose, or for providing the services as well. Second, charge only a fixed. It is depreciation is charged only on fixed assets. It is the property that wears out, decays, gets used up, become obsolete, or losses value from natural causes. Means whenever you have to charge the depreciation, you can charge the depreciation by continuous usage, or it will become the obsolete, or because of any natural damages, the value of the asset will decrease. Depreciable property can be either tangible or intangible. Tangible depreciable property, purchased property you can see or touch, like machinery, building, dams, ponds, partial business use, etc. And you can claim the depreciation on the part of the vehicle which is used by partially by you or partially by someone else. What cannot be depreciated? Property placed into service or disposed in the same year cannot be depreciated. Land can never be depreciated because it land always appreciate, not never depreciate. Inventory means current assets. Current assets means resaleable property or resaleable assets cannot be depreciated. All the current assets cannot be depreciated. Leased property, when you have taken the asset on the basis of the rent, you cannot have the right to charge the depreciation in your books. It is the right of the owner only to charge the depreciation in the books of accounts. So thank you so much. Till now, what you have studied? You have studied about the concept of the depreciation. What is depreciation? Depreciation means the value which is when you are charging a specific amount or write off a specific amount from the value of the fixed assets or the cost of the fixed assets for the purpose of write off the amount from till the uses of the life till the life of the asset, and the depreciation is the value decrease in the value of the asset. And depreciation, what are the benefits? Benefit depreciation is charged only. The key points related with the depreciation is charged by the owner only. It cannot be charged by the person or the tenant, or it can depreciation is charged on the fixed assets only. It is not charged on the rented assets or the current assets. And the land is the exception of the depreciation. When you are charging the depreciation, you will charge the depreciation on the fixed assets, but land is the exception of that. And apart from this, depreciation is an internal expense. Depreciation is the amount which you have collected through the depreciation. You will take out some amount from the profit of the current year, and you will collect that amount for the replacement of the asset. And this is the benefit which is reduce your tax liability also. So thank you so much. In next video, I'll let you know the methods of the depreciation. Thank you so much.